Welcome back to Everyday Finance, where we help you make the most of your money. You know, your 20s are a time of huge growth and change. You're finishing up school, starting your career, maybe even thinking about buying a home or starting a family. But with all these exciting milestones comes a lot of financial responsibility. Today, we're diving into the top 10 money mistakes to avoid in your 20s. Trust me, dodging these pitfalls can set you up for a lifetime of financial success. All right, let's be real. Budgeting might sound about as exciting as watching paint dry, but trust me, it's the foundation of a solid financial life. When you budget, you're essentially creating a roadmap for your money. This roadmap helps you navigate through your financial landscape, ensuring you don't get lost or sidetracked by unnecessary expenses. Think of it like this: how can you possibly expect to reach your financial goals if you don't even know where your money is going? Setting financial goals is like setting destinations on a map. Without knowing your starting point and the path you need to take, reaching those destinations becomes nearly impossible. Without a budget, it's like driving with your eyes closed. You wouldn't drive a car without knowing where you're headed, right? The same logic applies to your finances. A budget gives you the clarity and direction you need to make informed decisions. You're clueless about how much money you're bringing in, where it's going, and how much you can actually afford to spend. This lack of awareness can lead to overspending, debt, and financial stress. By tracking your income and expenses, you gain a clear picture of your financial health. This is where budgeting apps come in handy. These apps are designed to simplify the process of managing your finances. They can automatically track your spending, categorize your expenses, and even provide you with personalized insights and recommendations. They can track your spending, categorize your expenses, and even give you personalized insights. With these tools, you can easily identify areas where you might be overspending and make adjustments accordingly. This proactive approach helps you stay on top of your finances and avoid any unpleasant surprises. But remember, a budget isn't about restricting yourself. It's about being in control and making informed decisions about your money. It's about giving yourself the freedom to spend on the things that truly matter to you, while ensuring you're also saving and investing for your future. So, track your money like a hawk and watch your financial confidence soar. Credit cards can be a convenient tool, offering a quick and easy way to make purchases without carrying cash. They can be especially useful in emergencies or for building your credit score. But they can also be a slippery slope to a mountain of debt if not used responsibly. It's easy to swipe now and worry later, but that later can come with a hefty price. Those high interest rates can quickly snowball, making it feel like you're drowning in payments. Before you know it, the balance grows larger and larger, and it can seem impossible to get out from under it. I've been there, and let me tell you, it's not a fun place to be. The stress and anxiety can be overwhelming, affecting not just your finances but your overall well-being. The best way to avoid credit card debt is to treat your credit card like a debit card. This means only spending what you can afford to pay back in full every month, just as you would with money directly from your bank account. Create a budget and stick to it. Track your expenses and make sure you're not overspending. This will help you stay on top of your finances and avoid the pitfalls of credit card debt. And if you do find yourself in credit card debt, don't panic. It's important to stay calm and create a plan to tackle it. There are several strategies you can use to pay down your debt effectively. One approach is to focus on paying down the card with the highest interest rate first. This will save you the most money in the long run by reducing the amount of interest you pay. While doing this, make minimum payments on your other cards to keep them in good standing. This way, you can gradually reduce your overall debt without falling behind on any accounts. Another strategy is the snowball method, where you pay off your smallest debts first to build momentum and motivation. This can be a great way to see progress quickly and stay motivated. And hey, if you're struggling, don't be afraid to reach out for help from a financial advisor. They can provide personalized advice and help you create a plan to get back on track. Remember, you're not alone in this, and there are resources available to help you succeed. Life is unpredictable, right? Your car could break down, you could lose your job, or you could have an unexpected medical bill. That's where an emergency fund comes in. It's your financial safety net, there to catch you when life throws you a curveball. Aim to save at least 3 to 6 months' worth of living expenses in a separate, easily accessible account. I know it sounds like a lot, but trust me, having that peace of mind is priceless. Start small if you need to. Even setting aside $50 or $100 a month adds up over time. Chapter 4. Retirement Savings. Start now, thank yourself later. I know, retirement seems ages away. Why even think about it in your 20s? It feels like a distant dream, something to worry about later, right? But here's the reality. The earlier you start, the better off you'll be. Well, here's the thing. The earlier you start saving, the more time your money has to grow through the magic of compound interest. Imagine your money working for you, growing little by little every day. It's like a snowball effect. What starts as a small amount can grow into something substantial over time. Even small contributions can make a huge difference over time. Think of it as planting a tree. It starts small, but grows into something mighty. Take advantage of employer-sponsored retirement plans, especially if they offer a match. It's free money, people. Don't leave that on the table. And if your employer doesn't offer a plan, look into opening an IRA. There are so many options out there, and it's easier than you think to get started. The key is to start early and be consistent. Set up automatic savings so you don't even have to think about it. Your future self will thank you. Imagine looking back and feeling proud of the decisions you made today. It's never too early to start planning for a secure and happy future. Chapter 5. Lifestyle Inflation. Don't fall into the trap. It's easy to fall into the trap of lifestyle inflation. You get a raise, you start spending more, and suddenly you're stuck in the same cycle. But here's the thing. You don't need to keep up with the Joneses. Focus on living below your means, even as your income grows. Instead of upgrading your lifestyle with every raise, consider investing that extra money or paying down debt. Remember, true wealth isn't about how much you spend, it's about how much you keep. Chapter 6. Investing Grow Your Money. Investing might seem intimidating, but it's one of the most powerful ways to build wealth over time. You don't need to be a Wall Street whiz to get started. There are tons of resources available to help you learn the basics. Consider investing in low-cost index funds, which are a great option for beginners. They offer diversification and the potential for long-term growth. And remember, investing is a marathon, not a sprint. Don't panic sell when the market takes a dip. Stay the course and ride out the fluctuations. Chapter 7. Track your expenses. Know where your money goes. Remember what we talked about with budgeting? Well, tracking your expenses goes hand in hand with that. You need to know where your money is going to identify areas where you can cut back and save more. Luckily, there are tons of apps out there that make tracking your expenses super easy. You can even link them directly to your bank accounts and credit cards for automatic tracking. Once you have a clear picture of your spending habits, you can start making adjustments and plugging any leaks in your budget. Chapter 8. Financial Goals. What are you working towards? Having clear financial goals is crucial. Without them, you're just drifting along, hoping for the best. Your goals will give you direction and motivation. Think about what you want to achieve financially. Do you want to buy a house, pay off debt, retire early? Once you have your goals, write them down and break them down into smaller, more manageable steps. This will make them feel less daunting and more achievable. Remember, your goals are personal to you. Don't compare your journey to anyone else's. Chapter 9. Health Insurance. Don't risk it. I know health insurance can be expensive, but trust me, it's an investment worth making. One unexpected medical bill can wipe out your savings and leave you in a mountain of debt. Shop around for the best plan for your needs and budget. If you're young and healthy, you might opt for a high-deductible plan with a lower monthly premium. And don't forget to take advantage of preventive care services, which are usually covered at no cost. Chapter 10. Impulse Buying. Think before you swipe. We've all been there. You're scrolling online or browsing the aisles at the store, and suddenly you see something you just have to have. But before you whip out your wallet, take a step back and ask yourself, do I really need this, or is it just a want? Impulse purchases can wreak havoc on your budget. To avoid them, try implementing a 24-hour rule. If you see something you want, wait 24 hours before buying it. Chances are the urge to buy it will have passed, and you'll have saved yourself some money. Thanks for watching. If you found this video helpful, make sure to like, subscribe, and hit the notification bell for more tips on managing your finances. Remember, your 20s are a crucial time to build a strong financial foundation. By avoiding these common money mistakes, you'll be well on your way to achieving your financial goals and living a life of financial freedom. Drop a comment below on what money mistakes you've learned from, and we'll see you in the next video.